It is now officially 2 o'clock, and my name is Amy, and I'd like to welcome you to the Virtual Venture Cafe's InsurTech Conference, and give a special shout out, special welcome to our first-time community members. Our first session of the day will address cyber risk in the insurance industry during COVID-19. As you may know, Venture Cafe is a nonprofit, and all of our programming is free and open to the public. This is made possible by our corporate partners, and we would like to say a very special thank you to Sampo Digital Lab for supporting our InsurTech event today. Before I hand over the session to our very talented presenters, please remember to ask any questions you have in the chat. I'll be over there for sure. You can send the questions so that everyone can see them, or directly to the panelists so you know your identity will remain private. With that, I'd like to introduce Charlie Sidoti, who will be moderating this discussion. Charlie is the Executive Director at Innovation Underwriters, an insurance collaborative fostering breakthrough innovations in management of risk and the business of insurance. The organization helps insurance companies solve society's biggest risk-related challenges through creative leadership and practice. Charlie, take it away.
All right, thank you very much. Greatly appreciate everybody coming. This cybersecurity is obviously a major issue always, but with COVID, we're going to explore the before and after COVID, the work from home, and we have a fantastic panel. And what I will do is give brief introductions, and then I will have the panelists go around and kind of give a little bit more of their individual backgrounds. So on the panel today, we have Mr. Scott Stransky, who is the Director of Emerging Risk Modeling at AIR Worldwide. Risa Parcella, who is the VP of Product Management and Marketing at Security Innovation. And Risa Pecoraro, who is an entrepreneur in residence at Innovation Underwriters, and was previously the head of product at CyberScout. So starting with Scott, why don't you give us a little bit of your background before we jump into it?
Sure, yeah. So AIR Worldwide, for those who don't know about it, is a company that builds models for extreme events. So we got our start actually over 30 years ago, and we were building models for natural disasters back then. So things like hurricanes, earthquakes, tornadoes, fires, and floods. But after the Target breach in 2013, we realized that a lot of the modeling fundamentals that we applied to natural disasters actually could be used to build a cyber model as well. So since 2013, we've built out cyber modeling platforms and solutions to help the insurance industry really estimate the potential financial losses from cyber incidents, whether they're cyber breaches like the Target breach or the Marriott breach or Capital One, whether it's a cloud downtime like Amazon Web Services failing for some number of hours or days, or something quite extreme like a systemic ransomware event that takes out a lot of companies at the same time, leads to a lot of business interruption. That's a bit about my background. I'm happy to share more as we go.
Great, thank you. Lisa, why don't you give us a little of your background and security innovation?
Sure, thank you. So security innovation has been around since 2002. We've really been a pioneer in the software security space. We rely on our assessment services and training solutions to make software systems safer in every environment, web applications, IoT devices, the cloud. We really have a pretty revolutionary flagship product, which is our Cyber Range. It's an authentic environment used to build the skills that teams need to protect their enterprise. And so for the past 10 years, I've been in the cybersecurity training space, helping organizations safeguard their critical assets by mobilizing their most abundant resource in their people.
Great. And Risa, Risa and I go way back, and we've worked on a lot of projects, and she's been helping us run a Creation Labs initiative. Why don't you tell the audience a little bit about your background overall and what we're working on these days? I think you're on mute. Hold on.
Mute. Here we go. I've unmuted. So as Charlie said, we go way back. We actually worked at the same company 20 years ago. We didn't really cross paths. We only overlapped by about 6 months, but that's how long. You know, Charlie and I have both been kicking around insurance. So the past 20 years I've been in insurance and or insurance adjacent companies. And I'm really an e-commerce platform and digital distribution specialist. And so most recently, I was the head of product at a company called CyberScout that works to provide insurance companies services for identity protection. And obviously identity protection has really evolved to the market in the field of cyber risk, you know, including breaches for small businesses and households that increasingly resemble more like connected businesses. When you think about all the things you have in your homes and that, you know, could be potentially breach worthy. So recently, Charlie and I have been working together on a cyber risk group that is thinking about how to create a funnel of ideas and new products for insurance companies to really capture the cyber opportunity that is growing in leaps and bounds. And, you know, and will be forecast for the next decade or so.
And with that in mind, let's jump into the conversation. Before we get into the insurance, I want to get into the insurance gaps and where the insurance is now and how it wants to evolve. But before we do that, let's talk a little bit about just the security landscape pre-COVID and post-COVID, how you see it has changed. Specifically, you know, a lot of these large companies, I think I heard Liberty pushed 45,000 people into work from home situation in a period of months, if not weeks. So that's a dramatic shift, and that affects the security risk landscape. So before we get into the insurance specific aspects of that, let's just talk about the just pure security kind of change. And I don't know who wants to jump in first. I'll certainly pick. Or go ahead, Lisa.
Sure. So, I mean, you know, the most obvious change is that employees were enjoying kind of this walled garden of security, right, within their corporate environments. And they didn't even know what they didn't know, right? They might not understand endpoint monitoring and firewalls and all of the systems that have been put in place to protect them, even from such things as maybe less, you know, spam coming through on their email, you know, that kind of a thing. So pushing everyone out certainly proliferated the attack surface exponentially, and that's for the individual. But then when we look at what happened for the corporation, now we're talking about not only the issues around multi-factor authentication, network integrity, VPN usage, right? So what policies were in place and what protections were in place to ensure that as you had this workforce going out to be remote, do people understand just how to connect to their business? And then do they understand the security implications? And then add on top of that, getting an understanding of BYOD, right? So when you're at your office, you might not use your personal cell phone. You certainly don't have your Alexa, you know, plugged in at your work desk to overhear your conversations. So then when you're at home, understanding all of the ports, all of the inputs and devices that may be generating traffic and being proliferated on your home network and how to secure. So, you know, you have that attack surface. And then of course, the constant disruption, right? If your children are home, I have a dog lying next to me right now, you know, so you also have all of these different environmental factors that are coming in and creating more disruption. And to me, what that does, it just opens up the channels for these avenues for social engineering, phishing attacks, malware, all of these things that if you're in the quiet of your office, you're safely plugged into your network and you're working diligently, you can filter a lot of that out. But now you're in a whole new environment, and it might be easier also for some of those distractions to cause you to slip, right? And miss an email that looks like it's from your CEO and it really isn't, right? So now all these attacks could be proliferating within a workforce on an unsecured network. I mean, you know, just pile on the kind of concerns that you could have from a security perspective, and it gets pretty crazy pretty quickly.
So I would add to that from the other side of the picture, from the malicious actor perspective. We've done a lot of research into what the malicious actors are doing since COVID began. And we've seen several examples. You mentioned phishing attacks. We've seen several very well done phishing attacks related to COVID-19. One of them, it's pretty common, gets sent to an entire company and it's like, here's the office reopening plan. Well, everybody wants to know the office reopening plan, so they don't even think twice and they click it. And a few moments later, their computer has a ransomware attack, or they've been hacked. They've exposed their system to a malicious actor. We've also seen a few more personalized attacks. Maybe you're having trouble grocery shopping, click here for the latest way to get groceries. There's all these targeted COVID-related ransom and malicious emails that are going out. We actually, though, counted how many of these are going out compared to just the overall amount of spam and scam emails on the internet. And it's a surprisingly, or maybe not surprisingly, for me at least, it was a surprisingly low percentage. So at the peak of the COVID scam email distribution, it was early March when everybody was talking about COVID beginning. It was about 8-to-1 regular scams to COVID scams. So there's still 8 times as many just traditional scams as COVID scams, but there were still, therefore, a lot of COVID-themed scams. And the fear, the issue, and the reason that these scams are more successful is that with everybody starting to work from home, people are like, oh, I don't have to worry about company security. I'm at home, so I'm just going to click emails. I'm not going to worry about it. I'm very distracted. What's going on with the world? And people did click these emails. And again, that leads to all sorts of different problems, which causes a lot of damage to companies. Whether it's if a computer gets locked up due to ransomware, that's pretty expensive to either pay the ransom or restore it from sort of backup, if you even have a backup. If they're able to steal data, then you get a newsworthy breach in some cases, and that's devastating to a company. So there's a lot of ramifications of these. And I think the moral is you and I have this power to check an email before you open it. And it's very important that we do that. We need to be, especially during COVID, very diligent about that.
That's great. So just for the record, to Lisa's point earlier, when my ALEXA went off when you said that. So to highlight your point, I don't know if you've heard that. Risa, anything additional to kind of add to just the threat landscape before we really get into the insurance response piece?
Yeah, I think that, we're at the point of this gigantic societal shift where we're conducting so much more of our lives online, and we're just happy that we can do these things, right? We're happy we can get groceries. We're happy we can have some, core healthcare, services through telehealth, where our employers are happy that they're realizing that we're productive. I think there will be definitely a second wave of analysis around, okay, we're so proud of ourselves as a society for keeping the lights on and the trains running, but now what? Because there are definitely, and I think Lisa made, just spot on points around how much we know that the biggest risks are really human behavior risks, right? And this is beyond just slap another training on. There's so much distraction, concern, fear, worry about things that have nothing to do with cyber. It's going to be I think there's a huge opportunity to figure out how you can build in those defenses through building good hygiene habits. And as an example, one thing that I thought was super interesting that I learned about kind of our current situation is how, there's been giant campaigns, worldwide global marketing campaigns where I'm washing your hands, right? Which we should all be doing anyway, right? This is not new, anything we shouldn't have been doing. But now all of a sudden, every country in the world is telling everyone in their country, wash your hands. Well, one of the interesting side effects of that is that the flu season has already started in the Southern Hemisphere, right? It starts in the South and it comes on up and, into the United States for our winter time. The flu season is really mild so far because people are probably washing their hands, right? So we know that you can change behaviors if you put the force behind it. And so something that I would, if I were, gonna draw the analogy back to cybersecurity, one thing we know that is important to have good cyber hygiene is to use good passwords, strong passwords, unique passwords. We know people don't. We know they reuse passwords. We know they reuse them across email, financial accounts, healthcare accounts. But imagine what would happen if, to influence behavioral change, You know, instead of kind of throwing another training at people, you did marketing campaigns just around password hygiene.
So I will mention about training. One of the things that we found that's actually very useful is not one of these training courses where you go through a presentation and then have to answer questions, but actually companies sending out fake scam emails to their employees and seeing who clicks on it.
Yep.
And that practical exercise is very interesting. You'd be surprised who clicks on it. In fact, it tends to be the upper level folks at companies more than the lower level ones.
I guess.
But actually, we've seen reports online that say about 15% of employees will click those fake scam emails. And then what do you do when they click it? You publicly shame them. It sounds kind of cruel, but if you do that once, then next time they get the real email, they'll think twice because they don't want to be publicly shamed.
Well, you know, it's public shaming or creating awareness around the fact that, you know, here's what phishing looks like, right?
So a question or a comment came in around like hygiene versus technology solutions versus people behaviors. And it was around the efficacy of technology versus hygiene. Anybody have thoughts on that before I shift gears into insurance products and services? Because it's always a discussion. Lisa, go ahead.
Sure. So I'd say, so right. So folks no longer on the VPN, certainly, as the question states, that's a technology hurdle. I think it's always going to be a mix, right? So technology isn't going to solve every problem. And we see that every year Verizon puts out the data breach investigation report, and it shows us that, you know, attacks are multi-pronged. So there's going to be some hardware components. There's going to be, you know, physical intrusion. There's also going to be a human element, some phishing or social engineering or malware. So I think that just is to say that there's no one silver bullet on the technology side or the human behavior side. I think we're always going to need a mix of both in order to effectively, you know, affect change and create a larger landscape of security throughout.
All right. So let's shift gear. The insurance industry is designed to respond to risks and help organizations transfer those risks, but also, and I'm going to talk a little bit about mitigate, but the cyber insurance market in particular, it doesn't have a 400-year history like some other parts of the industry. And it probably does. I don't even know how long cyber's been around, but it's certainly decades, not much more. And the product, and there's a lot of discussion about the product market, like gaps. Where are there gaps? Whether it's limits or coverage or even the process, like the products being offered in the industry are not nearly as apples to apples and comparable as like other homeowners insurance and other property type coverages which have evolved over centuries. So if the panel could comment on I guess the state of the alignment of insurance products and services to the landscape that we just talked about. It was already, you know, challenging, I think. And COVID just made it even worse. So if you could just comment on the state of that market.
Yeah. So cyber insurance has existed for decades, as you said, certainly. The concept around cyber insurance is actually less about computers and more about what is being insured. Well, that's the data. If data is lost or stolen, there's a lot of costs associated with that. For example, notification costs, credit monitoring costs, things like that. But it doesn't have to be data from a computer. And then also downtime. So if your data is inaccessible or if your website's down, the business interruption that leads to is something that cyber insurance definitely covers. Maybe just as an anecdote, you mentioned decades. Well, actually, back in 1903, if you look at incident databases of historical cyber incidents, typically the first one is in 1903. And there was a person riding a train in California with a briefcase full of medical records. And he left that briefcase behind on the train. Of course, nothing to do with computers, but it was personal medical records, very important data. Cyber insurance as a product didn't exist back then, but if that same thing happened today, it would be covered under a cyber policy. So I do want to caution that cyber insurance is less about cyber attacks on a computer and more about what happens to data. I think that's an important note.
Yeah.
As far as the market, it's very competitive. So at least from our perspective, seeing all the data from various insurers, the amount of data they can collect is limited to the insured name, if they're lucky, the industry and the revenue, and then the insurance terms, so the limits, deductibles, and things like that. Compare that to property, where they're getting building age, roof type, siding, how many windows do they have, square footage of the property. They get so much more information, and that's a huge challenge that we have to deal with in the cyber insurance world.
I'd add a couple things to what you guys just heard. I've seen an interesting evolution in cyber insurance towards the personal or the household side of the market. Started with a number of reinsurance companies sort of started to wade into that market, and what it was really kind of a bundle of product coverages, mostly with an classic identity protection, but then ransomware, malware protection. But also what I thought was interesting is most of them also have a pillar around cyberbullying. So that's a little bit of a different angle, right? Because it takes it beyond data a little bit in terms of reputational harm or emotional or psychological harm, and but the way that the harm is delivered is through digital means, right, that are kind of lumped into this cyber category. So that's a definite trend that I've seen through from not just reinsurance companies, but also some major carriers like Chubb, for example. So that's one point I wanted to just let the group know. Another one is that to the point around like information that you can collect, especially for commercial risks. An interesting trend that I've seen in the past several years are a lot of startups who are figuring out ways to get data through publicly available sources of information, similar to like what you would try to get for a home, right? In terms of how you would calculate risk. The challenge that I'm seeing, I think that information is available. The challenge that I'm seeing is that the insurers are having a tough time figuring out like actually what to do with it, how to evaluate it from a relativity model, right? Is this good or is this bad? And how does this influence risk? And so there's an underwriting challenge, an actuarial challenge, and then a systems challenge. They don't know how to bring this in a scalable, efficient way. So I think, for people who can crack all three of those things, there's definitely opportunity to mature the information that insurers can take to build a product.
And then I think for me, from the flip side of like helping corporations secure their environment, there likely might be a liability challenge as well, right? So you look at like the Target data breach. Target had a data breach. It was splashed across the headlines, and there was all this reputation loss and all of this damage to the brand. There were obviously folks were let go due to this problem. When it was all said and done, the drill down showed that the breach occurred through the HVAC system, which is a third-party system, right? So the onus wasn't even on the corporation necessarily. Was it their responsibility? Should they have carried the liability of making sure that the third party was acting in a secure fashion? Or is the onus on that third party? So understanding where the liability lies from the sort of corporation level, the third party landscape, and then down to the consumer, right? Like as a consumer, if I'm carrying cyber risk insurance, am I liable if there is an identity theft situation, or does that fall on whomever was holding that information at the time, my bank, for instance?
And I would say the other big part of cyber-related insurance is what we call non-affirmative or silent cyber. So we've been focused so far on what we call affirmative cyber. This is a policy that you're given by the insurance company that says, I'm covering you if data is stolen or lost. I'm covering you if you have downtime. But what happens if somebody were to hack into your network of printers and make them overheat, catch on fire, and burn the building down? Well, now your property policy is going to be on the hook for that. And the property underwriters are not considering the risk to their policies from cyber incidents. So it's quote unquote silent on whether it covers cyber. And that's a huge issue. This covers basically every line of insurance. You could think about life insurance. Well, what if a hospital gets a ransomware attack and patients die? You could think about auto insurance. People hack cars. There's basically every line of business is at risk from cyber incidents. And therefore the cyber risk goes way beyond just a traditional cyber data breach.
Yeah, it's such a good point, Scott. Such a good point.
And I just think to that, I mean, it is such a good point. And the aggregate risk associated with that, as everything gets more and more interconnected and computers are controlling physical things more and more, the scope and nature of that risk is dramatically increasing because people are putting in things that are like, oh, it controls my thermostat, now everything froze. And it also aggregates things. So like, okay, I just turned off 1 million whatever thermostats because of so like there's catastrophe issues beyond individual companies or individuals. So
yeah, this has happened in real life already. With NotPetya back in 2017, Merck, the big pharmaceutical company, suffered $1.3 billion of loss from the ransomware attack because their production facilities got impacted by the virus. So it's a computer virus that shut down actual production of drugs. And they're still in court right now fighting with their insurance companies on that $1.3 billion loss. We're not exactly sure how it's going to turn out, but it's currently underway.
You think that there's a model for that though, like when you see like for homeowners insurance when there's a catastrophe, right? The interplay between your homeowners insurance and flood insurance potentially, right? Where that maybe the cause was the hurricane that came through, right? But your damage, maybe you've got some wind, but a lot of flood or something, right? And there are models for parsing those things out and pushing the risk and the liability, right, where it belongs. So you would think that they would be able to take an example like that, right, and then figure out how to apportion it correctly with cyber.
So yeah, absolutely. So we've been talking about the risk quite a bit and a little bit about the products and services that are available. Simple question, like, are the products and services available? Clearly, they probably don't meet fully the needs of the customers, especially since it's a moving target, as we talked about in general, but with COVID as well. To what extent do you think the industry is meeting the needs of customers in terms of what they need, in terms of the scope, nature, limits, types of policies that are available? Just gut feel.
I think they're leaving a lot on the table. I think they've got marketing issues, distribution issues, and product issues. So even if they had a perfect product, I don't think they know how to market this. I think that for insurance companies that use independent agents, I don't think they know how to incentivize the agent to properly inform and educate the buyer around what they need and why they need it. The things that I've heard in the past are, well, it's not a core product yet. And, from a shelf-based perspective, the broker is always going to focus on what's core to them. They don't make enough money yet. They don't know. They don't want to look wrong. But, again, so I just think there's a lot of money being left on the table.
Absolutely. Absolutely. Yeah. Limits are quite low today. Why are they low? Because the insurance companies are uncomfortable with the risk at this point. Hopefully having models and things will help with that. But still, if a limit is $10 million or even $100 million and there's a breach, you're going to blow through that entire limit easily. Every notable breach, Target, Marriott, Capital One, Equifax, they've all blown through the entire insurance tower. So clearly limits could easily be higher and there would be a demand for that.
So this session is all about InsurTech innovation. How's the insurance industry and the adjacent kind of technology providers? Is it modeling? Is it more than modeling? How do you think innovation is going to play out here? The $1 million question.
So I work for a modeling company, so I think modeling is a very good solution. I think I have to say that, but no, in all seriousness, a model is a tool. Yeah. We're not going to give you the answer. We're a decision support tool, and modeling does help. We've seen with hurricanes, not yet with cyber, but after Hurricane Andrew in 1992, 16 or so insurance companies went out of business because they didn't know how to price the risk. They didn't know how to evaluate the risk. Since Hurricane Andrew, just about every single insurance company in the US and many around the world, every reinsurer has taken up models, whether they're ours or our competitors. And they use those, and then very few of them go out of business. It's not just because of models, but models definitely help them understand that tail risk. We look at the 1 in 100 or 1 in 250 year type of risk, and that helps them make a decision. Again, we're not saying we're the golden ticket, but we believe models do help with that.
I think that's totally true. I also think what you said, Risa, earlier, part of it is selling a product that people don't necessarily understand. They don't know why they need it or what they need. Especially, there's the big sophisticated accounts who have teams in place to evaluate. But as you get down towards the middle market and certainly the individual, people are overwhelmed.
Oh yeah.
How do you think the industry could or would or will, or what direction are they going in terms of responding to the the insurance kind of purchasing process and understanding it?
Yeah. Well, so I'll speak to the P&C side of the house. I think that market is going to see, those lines of business anticipated to see seismic shifts over the next decade or two anyway, because of the changes in driving and how people consume cars, really. And, there are going to be fewer and fewer units for insurers to be able to actually insure, just because of the way that we're changing our driving habits. And so it's going to be very hard for them to grow premium through units, right? They're going to have to do it through other ways or manage expenses. So as we've obviously seen just in the recent, several months, claims are down dramatically, but that's not a way to grow a business. And I also think, we've seen, from a homeowner's perspective, we see more people renting, fewer people buying, they can't afford it, they don't want to, lots of reasons, socioeconomic reasons behind that. So from my perspective, insurers would do well to be looking at ways to naturally extend their brands that they've spent a ton of money on building out into the arena of personal identity protection, however you want to frame that, or personal home cyber protection. When you think about how people relate to their insurance company, whether it's, let's just say it's neutral, not positive or negative, but what do? They, protect me from things that are kind of complicated and they don't totally understand or want to understand. But I know that generally, my hope is that if I have some sort of problem that causes me financial harm, that I'm going to call them and they're going to, help me, dig out of it, right? Whether that's something with your home, something with your auto. And to me, again, logical extension to start doing with people's, personal identity protection. I think Allstate has done some interesting things over the last several years, in that they haven't explicitly stated that this is something that they're looking at doing, but they've done a couple of things that I think are interesting in that arena. The first is that they invested in a digital privacy product, and that it was sort of a standalone within Allstate. They debuted it at CES. It didn't actually have an insurance product in it. They didn't want to build insurance in it because that creates friction, regulatory, complications. They wanted an insurtech product that was highly, very well designed, highly digitally, it was mobile first, and was something that they could distribute using the Allstate brand, but not with an insurance product to start. So that was sort of interesting to start. And then they purchased InfoArmor, which is an identity protection services company. They did it under their employee benefits arm to start, but then they quickly started, making moves into moving quickly to integrate it into their P&C arm as well. And then I don't know if people know this, but right around the time that sort of there was this, global, health and economic meltdown, they offered free identity protection to everyone in the country for the year, basically, as a sort of a gesture of goodwill. But from a marketing perspective, right, again, that's a big thing to put out there. And so, I'm a little curious to see if that's, part of their master plan. They're not calling me and telling me about it specifically, but I think there are two interesting things that have happened for a very big, P&C company. I definitely would continue to watch that.
Yeah, and I know, so like, just in preparation for this panel, just sort of looking around and seeing what was out there, the National Association for Insurance Carriers had a stat saying that total cyber insurance market for 18 was 3.8 billion, which is up 14.5% from the previous year. So, it's clear there's an appetite out there. You look at all of the nascent products, LifeLock, right, has over 5 million members. And the number one claim in cyber, for personal cyber, is identity theft, right? So I think that's something, a real target you can key into somebody's personal safety. And so looking at how products might use that as kind of the pivot point for how they might talk to the consumer market about cybersecurity insurance feels like a right starting point, right? Because identity theft is such a starting point to then, avalanche into all of these prolific problems that could occur in your life, into your livelihood. So, maybe a good way to kind of continue to push that conversation along at that consumer level.
And pushing that conversation along, I think a trend in insurtech in general is moving beyond the core solution of the insurance industry, which is risk transfer. They're going to pay for the consequences, to more and more mitigation. I think that's happening across all of insurance to some extent. The new hot solutions, insurtechs usually have a much more significant mitigation component to them than just, hey, you get your claims paid. But cyber, some of the cyber groups are kind of leading that charge. And as I look at it, I always wonder where it will go, and would it ever evolve to a really comprehensive, here's especially for the smaller, unsophisticated businesses and individuals, here's a complete solution that both protects, prevents, and transfer risk, and it's in a nice, neat package. Do you, that's, I don't know how realistic that is. I'm super curious what this august panel thinks about where that's going, because it's certainly interesting to me.
Yeah, I think there's a demand for that, especially from smaller businesses. If you're a big business like Walmart, that's probably not very helpful to you. But if you're a mom and pop shop and you want protection for cyber, I think that would be very, very helpful. And I mean, one of the things we look at is what we call take-up rates, how many companies actually buy insurance. And for small businesses with revenues in the millions or tens of millions, the percents are single digits. So maybe they don't know they need it, but they do need it. And I think there is a demand for that. The product doesn't exactly exist yet. You can piece things together here and there, but it's very difficult to get a one-stop shop for exactly what you just said.
Yeah, I think the challenge will be putting together that right level of product based on, what are the commonalities of the risk landscape to put together a product that will do just that, protect, what are the right products for protection from a technology perspective, from a employee perspective, and then, what is the insurance that would help cover that. I think it can be done for sure, right? The products are out there, but they're going to have to do their homework to figure out what those right technological solutions are that would be most broadly applicable to make the product worth buying at scale.
All right. Yep. Risa, any additional?
No, I mean, I don't see this as a product problem. I really do see this as a marketing and distribution problem. Again, when you think about the top, so Geico spends, I don't know what they spent last year, but the year before that, they spent like $1.2 billion in marketing, right? And Progressive spends, between, 5 and 750. Allstate spends, maybe $750 million. I mean, think about what if you took $100 million of that, right, and just put it all to marketing a cyber product. What a big difference that makes in terms of the viability of the market and the demand for the market, and also, informing the consumer around, whether it's a small business or a household, about what it is they need, what the benefits are, right? It's classic marketing, right? That's what it's meant to do. So, I think you can come up with a product, no problem.
Yeah. So I was just going to say to the audience, thank you all for coming. We're going to be opening it up for questions in a few minutes. By all means, enter them into the chat and we will go through them. We actually just got a question that came in. And what is the one cyber risk product that every individual needs right now? One that exists, and then if one that needs to exist.
I mean, I would say a password manager. I know it sounds very low rent, but if you're the number one thing you can do, right? Good password hygiene, use unique ones, use difficult ones. And that's impossible for us as individual humans to do. You really need a tool to help you do that, and something that is compatible with, like, your browser extensions and, and your mobile devices that you use. Basically a traffic cop situation for your passwords.
Any other comments?
So if we're talking not about companies, if we're talking about literally individual people, I would say it may not be a product. It sounds silly, but common sense. You don't need to build a product to do that. But I would say when an email comes in, if it has an attachment or a link, just think twice before you click it. That's the best way to protect a company. Many very famous breaches are traced back to people not doing that. Just something that simple. The bad actors seem very believable, and that's a pretty good way to do it. I guess if you wanted to invent a product, it would be something that gets hooked onto your email that really can tell you, is this a legitimate attachment or not? And that would be somewhat tough to do, because if I were to hack into somebody's, I'm not going to do this. If somebody were to hack into somebody's account and send an email from their account directly, then it's not like, oh, somebody spoofed it. They were literally in that person's account. So it'd be a big challenge to create that, to truly authenticate that the attachment is from the person they say it's from, and it's what they intended to send. But I think that would be a very interesting product if it could be done.
Okay. What follow-up question on the password manager comments? Would workplaces give extra money, or I'm going to add through employee benefits coverages, provide tools like that for personal use?
They should. It benefits everybody. It's a little bit like some, herd immunity. And they don't have to be expensive. I know that from a retail perspective, they can be anywhere from like, the free ones don't give you enough, really. They don't give you enough password protection. They usually limit it to like 5 or 10. Or it's in some other way. It's not meant for real regular robust use. But so just say, a retail version is somewhere between like $40 and $60. Wholesale, those things, if a company was buying it at scale, it doesn't even come close to that price. So it's affordable and it's effective.
Yeah, and oh, sorry.
No, go ahead.
A lot of password managers will allow you to kind of maintain a corporate and a personal profile, because it is such a critical product. So you can often do that. And then also, just expanding upon that idea, most organizations should have a pretty robust BYOD policy, bring your own device policy, right? So they should help folks understand the personal implications of when they use their personal devices in conjunction with their corporate logins, having corporate email on a personal device, and what the risk landscape is there, using a personal cell phone to text and communicate with corporate folks within your environment, making sure that it's encrypted. So, making sure that there's a robust policy in place for that will help protect any private data that would be stored on those personal devices. And then as an extension, yes, allowing access to a password manager for personal devices in order to maintain the security of any corporate accounts that would exist there would be absolutely, just a no-brainer.
What would you, go ahead, Scott.
No, I was just going to add to that point, which is a very important point, that at least at my company, if you enter your password wrong a few times, or if a bad guy steals your phone and enters your password wrong, it not only locks it down, but it sends a message to the company so that they can keep track of where their devices are and if they're being accessed improperly. And that's another good way to keep track of these devices. So you have to install this software on your phone, even if it's a personal phone, if you're doing any work-related information on your phone. So a lot of people then choose not to do it, but then you can't get your work email on your phone.
Yeah. Seems fair.
So what, so great advice for customers. What advice do you have for the carriers if you were going to say if there's one thing that they should do? What should they be focused on? We can come back to that question.
No, it's a good question. I think the gray area of what is covered and what isn't is a big challenge for both the carriers and the people buying insurance. People like certainty, and the way that the contracts are worded, the insurance contracts are worded, a lot of these things are uncertain, and we end up seeing it playing out in court, and then it gives bad publicity to the carrier and to the company. Maybe the company did something wrong that the carrier is going to point out in court. Basically, it's a fighting match in court that makes no side look good. Whereas if the terms in the contract were more clear and more efficient, they wouldn't have to go through that process. So I think the wordings have a way to evolve, and we have not done that yet.
And I think making sure that the products are standardized, right? So as a corporation or an individual, if I'm looking to buy cyber liability insurance or cyber risk insurance, I'd love for it to be apples to apples so I can get a true understanding of what's being covered and at what premiums, right? I think there's so much variation right now in the market that it makes it hard for the products to be easily understood and easily, consumed. And then to Risa's point, if we have standards and then there's a lot of great marketing, I think you're going to see a huge uptick in folks who adopt this type of insurance.
Do you see that standardization, the trend towards it or away from it, or neither?
So I actually see a trend away from that because, again, how competitive the insurance market is. Everybody wants to one-up the competitor and have their own special clause in their contract that nobody else has. So for example, I'm not going to name the insurance carrier, but one insurance carrier considers business interruption and contingent business interruption the same from a cyber perspective. I mean, if your system is down and you suffer business interruption, or if you rely on, say, a cloud system and they're down and suffer contingent business interruption, the contract treats them equivalently. That's a huge plus if you're buying that insurance product, but it also means it's not even close to standardized. There's a lot of examples like that. Another thing that we call the waiting period, it's sort of like a deductible, but it's expressed in hours. Deductibles expressed in hours used to be 12 hours, then there were 10 hours, then there are 8 hours. Now we're starting to see 6-hour waiting periods on the market. Again, people are trying to one up the competitors to get business. So while I definitely agree with the panel that we need standardization, the market, I don't think, is going in that direction, at least yet.
Well, from a product perspective, right? I mean, I hate standardization because it makes it hard. You can't differentiate your product, and then you get into price wars, right? And which is just absolutely what is not healthy in this scenario, right? I think that, in order for the market to function effectively, insurers have to feel confident that they can be profitable. So, a race to the bottom is never a good way to get there, right, from a price perspective. So, but to your point, I mean, some level of standardization, right, like has to happen, because otherwise it's too confusing. There's too much choice, and people won't be able to, move themselves over the line unless they're forced to for compliance reasons.
A question came in about cyber risk insurtechs to watch, if you have any on your list. I'll throw one in there. I find Corvus MGA out of Boston, Phil Edmondson, a longtime broker, putting together a group. And I think they're so interesting because they are going down that path of embedding more risk assessment, value-added risk mitigation kind of tools and technology, and bundling it with their insurance products and services. But there's a lot out there. I don't know if there's any you want to mention or that come to mind.
Well, there's so many. But one I thought was, I'll mention the company, but really it's the company's called Nullify. But what's interesting about what they've done is that they, basically acknowledge, what they try to do is they try to help you to avoid, having your data stolen. But then what they do is they acknowledge that that's not always possible, right? So what their product does is it tokenizes pieces of information so that if a hacker does get into your system and steal something like email addresses and passwords, they're useless. They don't have any economic value on the market. You can't sell them, you can't decrypt them, you can't do anything with them. So, all that effort is for naught. So I thought that was like a marvelously simplistic solution to a problem. And somebody earlier asked about, like, can't technology solve all, why don't we have technology solve the problems? Well, technology can, but there are always holes. And I thought this was just such a, beautifully straightforward approach to, when technology has a hole and somebody gets through, a way to like take information and then just render it, not having any value to the purpose for which, the theft was initiated.
A question came in, and it's on my other screen, so I'm looking the other way. Do your risk models, and I believe this is for Scott, take in newer architecture concepts like zero trust VPN, zero trust vice VPN?
So I'm not familiar with that particular VPN.
Yeah.
But we do model lots of different what we call points of aggregation. So these are systems that are used commonly by a lot of different companies. And so models are used for many different purposes. Certainly we've talked a bit about individual risk. A new risk comes in, you could use a model, evaluated cyber risk. But another key reason to use models is looking at aggregation risk. And aggregation risk tends to follow points of aggregation, which could be a cloud provider. It could be an operating system that's not patched. It can be actually a geography. I know people think, oh, cyber is geography-less. Well, NotPetya was targeted towards Ukrainian companies because it was introduced via Ukrainian accounting software that had some issues. So actually there could be a geographic aspect to it. There could be an industry-related aspect to it. Again, in that case, it was accounting systems, so the financial industry. So when we look at points of aggregation, again, the particular VPN that was mentioned in the question is not one that I'm familiar with, but certainly VPNs themselves are a key point of aggregation that we would consider in modeling, yes.
Great, thank you. Question came in, what are the best channels to sell cyber insurance? And as you answer that, talk about, there's different types of insurance. I don't know if they all align with the same channels. And then the follow-up question to that is, how can InsurTechs innovate there? Which I think gets to some of the things you were saying, Risa, about the marketing, the marketing piece. How can you innovate on the sales of the products and services and the budget? So whoever wants to take that, what are the best channels? What are the most interesting channels to sell cyber? Anyone? Lisa? Risa?
Well, I think the most interesting channel is the one that works. I don't think we have to think about it. Yeah. And so from a funnel perspective, and as a product person, right, I struggle with this so much because it's like, there's the build it and they will come perspective, and every once in a while that works, right? But awareness, really greases the wheels there. So, I think if you market it and obviously, you could probably do something direct to consumer, or you could do it through brokers. The brokers, I will say, I think it's, I'm not negative about it, but it's going to be some work, right? Because you have to market to the brokers as a separate entity to prove to them that this is a product that is worth selling, and you're going to have to invest in it differently. You're probably going to have to over-invest in distribution to start. It's not going to work like your legacy channels, and that's probably a little bit hard for people to wrap their minds around.
How about the InsurTech piece? Like, technology's innovating the customer experience engagement process to increase sales. Any thoughts about what or how or who, or is that like a 4-hour conversation?
Well, I mean, I've been thinking about this, like, how do you, I mean, we talk about gamification, right? But I think one of the things, and we're not super close to this, I don't think, but, you know, ideal world, if, you know, I could have all of the technology product I wanted right away, I think one of the things that would be cool to do is like create some sort of like augmented reality or virtual reality scenario. So you could like walk through your home, walk through your business and see, you know, help with a, you know, you know, gamified scenario that helps you understand where your risks are and guides you through that process and makes it like kind of a little bit, you know, entertaining. Yeah, that's what I would say.
I think you hit on a big point. People don't understand their risk landscape as an individual at all, right? So yeah, having an easy way where you can just point your phone at it and say, is this risky? Is that risky? You know,
that's right. Exactly.
Is your ALEXA risky? It is, right? And people don't realize that. Like, I don't even have one in my house. So yeah, you know, you have to help people, I think, educate them to understand the risk portfolio that's in front of them. And I think that helps do some of the selling, right? When they understand that they're at risk, even though they may not realize it.
Right.
And I think one,
that's where I've got risk in my kids. I mean, it's like they're downloading stuff now, especially at their home. And I'm like, oh my goodness, what is happening right now? What do I have to delete?
I think one area that absolutely InsurTechs can help innovate. I think Risa mentioned earlier outside-in views, where you can look at public data on the internet. And there's a lot of companies out there that do this. Security Scorecard, BitSite, I can name dozens of these companies. But one thing that we've struggled to find to use in our modeling, and by the way, we do actually work with BitSite in our modeling. One of the things we've struggled to find is the opposite, inside-out data. There you need the permission of a company to go in. It's not public data, but to do that at scale is a big challenge. So doing a one-off investigation, you could send a team into the company that could spend a week and figure out what you need. But to do modeling, we can't wait a week. Our model needs to run very quickly. So there needs to be a way that if a company agrees to it or commits to this, they install some sort of an app on their network or download something that's safe that scans the inside of their network and returns something. And I think that's a huge area where innovation can help, because while outside in, I think that market is quite saturated. I know new outside in vendors pop up every day, which is great. But on the other hand, the inside out market is not saturated. And if somebody can crack that nut, there's a huge opportunity there.
That's a great, we literally heard that in our last meeting this morning. So we started with risk landscape about an hour ago, and we ended with understanding the risk landscape. That's what insurance is all about. So I think we're going to wrap it up. We'll turn it back to the Venture Cafe group. And thank you very much to the audience. Thank you to this great panel. And thank you to Venture Cafe for hosting us today. We totally appreciate it.
You know, Venture Cafe New England is always happy to do it. And I know the Cambridge team in particular is always happy to host you, Charlie, and to host.
Thank you.
If any of you want to come speak in Providence, either virtually, because that's what we're doing now, or you know, on the flip side, when we can be back in person, we welcome you down. Thank you so much for joining us today. And special thanks to our presenters, Lisa, Charlie, Scott, Risa. Yep. This was amazing. I've learned so much, and I am.
Oh, great.
And
we're happy to come down. And if anybody on LinkedIn wants to reach out, connect with me on LinkedIn. Anybody in the audience wants to connect, reach out.
Definitely.
Thank you.
Yes. Thank you so much for this. It was great. We appreciate everybody joining us today. And we'd especially appreciate it if you would take a little one-question survey we have on your experience here to panelists and attendees. I'm going to pop it in the chat. I am still kind of buzzing from all of the things I've learned, and I have 2 minutes to digest before our next session.
Nice. Thank you so much.
Yeah, so, you know, as we think about these AI things that have infiltrated our homes and are a risk, our next session is actually on smart robots and smart cities and the opportunities for insurers, and that will begin at 3 o'clock. If you'd like to attend that session, I'm going to put the link in the chat, and you are definitely free to do so. So thank you so much, everyone.
Thank you. Have a good one, everybody.
Thanks, everyone.